G'day folks, Jim Langlands here from FX Charts with the currency outlook for the Finance News Network for Thursday the 31st of May. Well, it was a pretty dire day again for the euro. Nothing's going right in Europe, and Spanish and Italian yields both headed higher today. Spain hit 6.71%, I think it was, a post-EU era high. Italian yields were over 6%. And nothing looks very good. The concerns over the Spanish banking system continue, and the euro looks as though it's going to remain under severe pressure. To add to that, we've got the Greek election coming up, and that looks to be pretty much a dead heat. So it doesn't look as though there's going to be any clear outcome there. The euro is currently at 123.60, not looking good. It hasn't managed to really bounce at all from the New York close. It's pretty much on its lows, and it wouldn't surprise to see pressure down towards 123.25, possibly lower later in the day. We've also got the Irish vote today, of course, on the fiscal compact. They're going to decide whether they want to stay with it or not, so that's another banana skin that lays ahead. The only real winners today were the US dollar and the yen. The dollar strengthened against everything, and indeed US Treasury yields hit I think a 60-year low today, so there's safe haven buying going on all around. The yen broke below 79. It's back above it at the moment. It got down to 78.90 area. But that's beginning to look as though it may have some more downside and won't please the MOF or the BOJ in Tokyo. The dollar, well, the euro, that took cable and Swissy with it. Sterling's down to 154.80 at the moment, sitting on Fibonacci support, but it looks though that could break and we could see lower levels. And likewise, dollar Swiss is at 97.10. Medium term looks like it may be headed back to parity, although the shorter term charts are a little bit overbought, and I suspect we may see a bit of a correction lower to allow those to unwind. The Aussie and the Kiwi, of course, they joined in. The Aussie hasn't really looked back since the retail sales yesterday, to be honest. It's currently trading just above 97 cents, but a test of the low at 96.90, last week's low at 96.90. And then November's low at 96.60 doesn't look to be too far away. For today, though, it's probably going to be reasonably range bound. We've got the China PMI, of course, tomorrow, and then later on the non-farm payroll. So the Aussie will gyrate around those, being dragged around by other currencies. The Kiwi's down at 75.25. Once again, it's not looking real good, and I think a test of support at 74.60 maybe on the cards. And it's a bit hard to see it getting back above 76 cents now, although the short-term charts are showing a little bit of divergence. What have we got ahead? We've got German retail sales and unemployment later on today. And then out of the States, we've got the ADP unemployment number, which comes ahead of tomorrow's non-farm payrolls. So it might be that we have a bit of a day of consolidation ahead of plenty of data later on tonight, and then particularly tomorrow with the non-farms. So we'll wait and see, but right now things don't look particularly good for the euro, and it's all about buying dollars. That's really about it today. If you want a more comprehensive outlook on the markets, go to the website as usual, www.fxcharts.com.au. And otherwise, just please remember that, as usual, this outlook is a personal view only. It's not meant to be used as trading advice. So apart from that, have a very good day, and we'll talk to you tomorrow. Cheers.